What you're about to experience isn't just a lesson, it's a rewiring of how you see the market. This is not about tricks or shortcuts. It's about precision, logic, and control. So eliminate distractions. Get focused. Let's dive deep. Price action mastery, the language of the market. Before we draw a single zone, before we mark a candle or plan a setup, we must understand how price moves, why it moves, and who moves it. Because without that, every tool you use is blind. Price action is the raw, unfiltered behavior of price. No indicators. No lag. Just what price is doing right now. It tells a story of buyers, sellers, pressure, imbalance, and decision. Most traders never learn to read this story. They react emotionally to candles, chase moves, and confuse randomness for structure. But once you learn to read price action fluently, it's like putting on night vision goggles. The noise disappears. You see intent. You see the traps. And you know exactly when not to touch the market, which is more powerful than knowing when to enter. Let's break it down. Market structure, the skeleton under the chart. Price moves in waves. This is not just theory, it's how orders flow. When demand outweighs supply, price moves up. When supply dominates demand, price moves down. But it doesn't move in straight lines. It creates structure. A bullish market structure creates higher highs, higher lows. A bearish market structure creates lower lows, lower highs. Your first job as a trader is to identify what structure the market is in. Most traders make this mistake, they focus on candles in isolation. They look for random patterns like pin bars or dojis, and forget to ask, where is this candle happening in the bigger picture? A bullish candle in a bearish market is just bait. When you look at structure, start from the higher timeframe, zoom into the internal swings, identify break of structure, and change of character. The change of character is crucial. It tells you when the dominant trend is shifting. You should not enter blindly in a zone, you must wait for change of character to confirm intent. This is how you avoid catching a falling knife or getting steamrolled in a breakout. And here's where most educators stop. But let's go deeper. You need to understand that institutions, the banks, the hedge funds, the entities moving billions, don't care about your trend lines or support/resistance lines. They operate on logic, volume, and liquidity. And they manipulate structure to fool retail traders. They'll create fake breakouts. Induce panic. Trigger FOMO. And then reverse. So if you're relying on structure without understanding the context and the players behind it, you're trading blind. Liquidity, the hidden agenda of price. This is the invisible hand that manipulates most traders. Liquidity is what institutions hunt. It's where your stop loss is. Where retail enters wrong. Where moves begin. Types of liquidity: equal highs/lows, double tops and bottoms, trendline liquidity, fake breakouts, round numbers, psychological traps, order block cleanouts, price hits previous zones just to reverse. Here's the truth: price doesn't move randomly. It moves to liquidity and away from it. The market seeks to grab orders, fill big positions, and then reverse. When you see price spike above a recent high and then close back below, you just witnessed a liquidity sweep. Retail traders think it's a breakout. Smart money knows it's a trap. This is where false educators mislead you. They show you breakout patterns. They sell you indicator packs. But they never explain the real engine of the market, liquidity. Why? Because if you understood it, you wouldn't need them. You wouldn't need signals. You'd become independent, and they'd lose their grip on your wallet. Once you understand this, you stop reacting to breakouts. You start waiting for the sweep. Then, you wait for the CHO. That's your weapon. Liquidity sweep confirmation equals sniper entry. It's not just a technique, it's a mindset shift. You go from being hunted to becoming the hunter. Candle behavior, micro-confirmations within zones. Stop treating candles like magic tricks. A single pin bar doesn't mean anything unless it happens in the right context. Inside a zone, watch for large wicks showing rejection, engulfing candles showing control, small-bodied candles showing indecision, fast momentum breaks showing urgency, but again, only in context. Here's the mistake traders make: they see a pin bar at a random area and assume it's a reversal. But price is still in a bearish structure. That's not a signal. That's bait. And here's what you need to internalize: your brain is wired to seek patterns, to find meaning. But in trading, that's dangerous. Because not all patterns are valid. Most are noise. And this is where your psychology sabotages you. You become hypnotized by candles. You convince yourself it's a reversal. You get greedy. You ignore your rules. And then you blow the trade. This is how the market punishes emotion. Wait for structure shift. Wait for liquidity sweep. Then use candles for micro-confirmation. Supply and demand zones, the decision points. Supply and demand is not about drawing boxes all over your chart. It's about locating the exact point where institutions made a decision. The origin of an impulse. The last unmitigated candle. The true base before the move. To find valid zones, identify the impulse move. Trace it back to the base candle. Confirm if that zone caused a break of structure. Check for liquidity above or below it. That's a valid zone. You not entering on touch. You watching how price reacts when it returns. And here's where 90% of traders get it wrong. They draw zones that are too wide. Or too vague. Or they mark every candle. That's not strategy. That's desperation. Institutions are precise. If your zone isn't, you're not trading with them. You're trading against them. And most YouTube educators won't tell you this. Why? Because teaching this takes effort. It doesn't sell as easily as a flashy, 3-pattern strategy. But we're not here to sell. We're here to make you independent. The entry confirmation process. You found a zone. Price is approaching it. What now? Here's the checklist. Price enters the zone. Liquidity above or below gets swept. Change of character on lower time frame. Rejection candle or engulfing move. Break of internal structure. Clean entry with minimal risk. When you follow this process, your entries become surgical. Your risk becomes microscopic. And your confidence becomes unshakable. And if you're still guessing, if you're still entering just because you feel it's right, then you're not trading. You're gambling. Smart trading is boring. Repetitive. Mechanical. And profitable. The biggest mistakes traders make and how to avoid them. Let's be brutally honest. Most traders lose because they enter too early, no confirmation. They don't understand market context. They trade every setup they see. They can't sit out when there's nothing clean, but here's the twist: this doesn't only apply to beginners. Even advanced traders fall into this trap. They become overconfident. They start skipping steps. They think they see something that isn't there. And the market humbles them. Success in trading isn't doing more. It's doing less. But with extreme precision. Here's what you must drill into your head: if the market is unclear, do nothing. If there's no change of character, do nothing. If there's no liquidity sweep, do nothing. If your zone is unclear, don't force it. Trading is not about catching every move. It's about catching the right moves. The ones that have confluence. The ones that make sense. The ones you can explain without emotion. And finally, this is why we're giving you this masterclass for free. No upsell. No mentorship schemes. Just raw truth. Because once you see clearly, you'll never fall for the lies again. Not the indicators. Not the gurus. Not the strategies that sell hope but hide the truth.